Gold just hit $3,500 USD for the first time in history, and we're not even close to the top. If you think you missed the rally, think again. I'm about to show you why $4,000 for gold price might be conservative, and which gold plays are still offering massive upside. I apologize, my camera's not working, and I'm at a different location, so we're just gonna have to stick with no camera today. Welcome back to Stocks Gold Live. I'm your host, Ali. And what a day for precious metal investors. Gold futures opened above $3,600 this morning. Everybody's bullish on gold. This extends the rally that is now at 35% this year. That's crushing the S&P 500 and the NASDAQ, which each of them gained 9% and 10% respectively. But here's what really is wild. This breakout came on the back of the terrible job report we discussed in the previous video. When economics data is bad, gold shines. When central banks are printing money, gold shines. When geopolitical tensions rise, gold shines. And right now, we've got all three happening at the same time. Today, I'm breaking down exactly why gold is breaking records, when it's headed next, and most importantly, how you can profit from this move even if you're just getting started. Let's start with the fundamental drivers behind this breakout. First and foremost, the dollar weakness. The dollar index has fallen sharply as rate cuts expectations have soared. When the Fed cuts rates, the dollar becomes less and less attractive to international investors. Gold, which is priced in US dollars, becomes cheaper for foreign buyers. But it goes deeper than that. What we're seeing today is what analysts are calling the perfect storm for precious metals. Weak job reports confirmed that the Fed rate is coming, probably multiple times. But it goes deeper than that. We're seeing today is the perfect storm for precious metals. Weak job reports confirmed that the Fed will cut rates, and probably multiple times. Lower interest rates reduce the opportunity for cost of holding non-yielding assets like gold. Then you have inflation concerns. CPI has cooled, but core services inflation remains sticky. And Trump's tariff policies could basically reignite the whole price pressures. Gold is the ultimate inflation hedge. It's been like that for thousands of years. And that's why you need to think about the risk management within your portfolio and hedge things against each other, like we've said many times in my videos. Here's a stat that is going to blow your mind. Central banks added over 800 tons of gold to their reserves in the first half of this year alone. That's the highest level since the 1960s. Countries like China, Russia, India are diversifying away from dollar-denominated assets, aka de-dollarization, and decoupling from the US banking system. Now, when central banks are buying, something big is happening. Because those guys are buying 800 tons. It's not because they like gold. They like to save their money and the value behind it. The technical breakout is actually impressive. Gold spent months consolidating between 3,200 and 3,400. We talked about it in my last video. The breakout above 3,500 triggered massive momentum buying. Algorithms, algo stocks, we talked about those. Automated systems, they kicked in. Stop losses were hit. And we got this explosive move higher. So how do you actually invest in gold? There's several approaches. I covered them in details in my last video, but I'm going to just talk about them in general. Physical gold, the purest play. Gold ETFs, easiest option for most investors. Aggressive investors can try gold mining stocks. And don't forget about silver either. The gold to silver ratio is getting around 75-1, well above the historic average of 60-1. And silver usually outperforms during precious metals rallies due to its smaller market size and industrial use. So keep that in mind. What's really driving this additional demand is the changing geopolitical landscape. The relationship with US and China, US and Russia, Trump's trade policies, uncertainty in the dollar's role in the world reserve currency. Look what happened with Russian sanctions. Their dollars reserves were frozen overnight. Other countries took note. They're asking, what if we're next? But you know what? Gold can't be frozen, confiscated, or devaluated by foreign governments. It's financial sovereignty in physical form. The Fed Reserve credibility is under attack. Trump has been openly criticizing Jerome Powell, talking about firing the Fed governors, even questioning the central bank's independence. When faith in monetary authorities wavers, gold benefits. Here's something also people miss. The yield curve inversion that precedes this job weakness. Inverted yield curves have predicted every recession since the 1960s. We're seeing classic tail cycle behavior. Employment weakening, Fed scrambling to ease policies, investors fleeing to safety. Europe, Japan, central banks are running nearly negative or near zero rates. Their currencies are weakening against gold. This is creating a global race to debase currencies, and gold is the beneficiary. Climate change is adding another layer. Extreme weather events are disrupting supply chains, creating inflationary pressures. Gold offers protection against all of this. It's a safe haven for everyone. From a technical perspective, this breakout above 3,500 is hugely significant. We've been in a multi-year uptrend since 2020 lows around 1,200. Each major resistance level now became a support level. So the next major resistance is around 3,750. And if we break that level, 4,000 becomes the next target. Some analysts are calling for 4,500 based on inflation adjustments. The momentum indicators are all pointing higher. RSI is bullish, but it's not overbought yet. The MACD indicator just triggered a buy signal. Volume has been strong. Here's what to watch out for: potential pullbacks. Any strengthening in the dollar could pressure gold temporarily. Also, if the Fed hints at lower rate cuts than expected, we might see some profit taking from gold. But even with all that, the long-term trend remains intact. Gold's been making higher highs and higher lows for over 4 years now. And until we see a break in that pattern, the path of least resistance for it is going to be going up. Well, there you have it. Gold historical breakout is backed by solid fundamentals, technical momentum, and changing global dynamics. Whether you buy physical gold, ETFs, or mining stocks, depending on your risk tolerance and investment timeline, you should really think about how gold fits in the portfolio. So, are you buying gold rally or are you waiting for a pullback? Let me know in the comments below. Thank you for watching until the end of the video. If you're interested in more content like this, please check out my channel videos. There are a variety of different topics that I cover, from news to macroeconomics and in microeconomics, as well as stock market analysis. Please consider subscribing and sharing this channel with other people that may be interested. And don't forget to like this video and comment below and tell me what other topics you want me to cover. Until next time, stay safe, stay diversified, and I'll catch you in the next one.